Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Shawn Cruz. He's the manager of trader services over at TD Ameritrade with our midday update. And Shawn, we've been talking about this for quite some time now. Finally got the phase one deal signed. The proof really is in the pudding. We have to see exactly what the agreement consists of.
Yeah, we're going to see exactly what the agreement consists of. We're going to see what they got done in this deal and maybe what they've put off to look into for phase two or phase three. I think phase two is one where you're going to start to see some pretty significant hurdles. Phase one presumably was the low-hanging fruit. We got that signed. That is good progress. But now we need to see if they're going to be able to make pretty, I'd say, fast progress in phase two, because I think they want to get this deal done as fast as possible. But if they start to run into problems in phase two, you have to ask yourself, are they going to maybe roll back some of the things they've loosened to get phase one done? Are those going to get put back on the table? There's still a lot of uncertainty around the China trade. And we saw a little bit of that in overnight, where you saw futures get a little volatile as a lot of headlines started to hit about what exactly was in phase one, whether they're going to run into problems with some of the issues around tech. Those are the things to keep an eye on moving forward.
Yeah, it's really interesting. The reaction was quite muted across the major averages. The Nasdaq 100 dipped slightly into the red for a couple of minutes there around the 2 o'clock hour, but we've come back now up about 1/4%, but it was relatively muted.
It was, but I think if you think about it, we've had phase one's been a known since, let's say, mid to early December. So we've had a lot of time to price that in. We knew the deal was going to get signed today, so it wasn't like this was necessarily a surprise to the market that they weren't expecting. They've had a couple days to digest this and slowly but surely price it in.
All right, let's take a look at some economic data that came out this morning. Producer price index, over 60% of the increase in the headline number was due to rising fuel costs.
That was, and I think that's an interesting thing to look into, because it came in about 0.3%. If you look at core, where you strip out food and energy, which is a little volatile, grew at about 0.1%. So the bulk of that growth, that increase, over 60% of it, came from rising fuel costs. That energy cost was actually in diesel, which increased quite a bit. Didn't help with a lot of the transportation costs, which drove an increase in transportation service costs, which clearly that fuel increase was getting passed along. But I think if you look at jet fuel costs, that actually fell over the month of December. And that's good news if you're looking at airlines, because that's a big cost for them in one of their busier months of the year, the holiday travel. They actually had one of their biggest expenses falling over that time period. I think that can actually help some of these airlines as we get into earnings season. We hear from them on earnings. And we actually heard some good news from Delta sort of confirming that just earlier this week.
All right, speaking of earnings, we jumped ahead a little bit here, but of course the big story of the day and of the week is the performance of the big banks, JP Morgan having a stellar quarter.
JP Morgan's had a stellar quarter, but if you look at some of these multiples that are pricing in, you can kind of see what sort of premium the market's placing on one bank to another. JP Morgan has always sort of demanded that premium, so they're trading nearly 2 times price to book. If you look at something like Citi, just below 1 times, and Bank of America at about 1.25. If you want to look at some sort of an earnings multiple, you can look forward to see, based off what they're expecting for earnings in 2020, what are they pricing in? Once again, you see that consistent sort of ranking there. JP Morgan higher than Bank of America, higher than Citi. I think Citi right now, they're expecting a slight pullback in earnings in 2020, and that's what's causing that multiple to be compressed a little bit. So Citi might be a name to watch, because they are actually the most levered to the global economy. So if you start to see a turnaround in global growth, say out of Europe or in China, or maybe you start to get a lot of optimism around progress on trade, Citi is actually, I think, well positioned to be the biggest beneficiary of that out of all the banks, just because of their elevated international footprint. So Citi is something to watch going into 2020.
All right, our next chart here, taking a look at fourth quarter earnings and what we've seen so far.
It's been a little bit of a mixed bag. I'm looking at growth. So the surprise is, I look at the 3 major banks, Bank of America, Citi, and JP Morgan, all beat sales and earnings estimates. But if you look at the actual growth numbers, analysts were expecting a little bit of a slowdown in sales growth. Wasn't as bad at Bank of America as they were expecting, but still negative. Earnings per share grew at Bank of America, Citi, and JP Morgan. I think the biggest driver of this, though, was a little bit of a surprise in their trading revenues, especially in their fixed income segments. That drove a lot of that pop in sales that helped drive earnings as well. If you're looking at the banks as a read-through on the U.S. economy, though, I want to kind of strip out that trading and look at the loan growth, because that's really what gives you a good read-through on overall economic activity. And we saw a little bit of a mixed bag. Bank of America had some pretty good growth in their loan book. JP Morgan, was a little bit more of a mixed bag. Citi, not as focused in the loan business. They're more in trading, but also in banking activity. When businesses are feeling good about the outlook, they will get into more M&A type deals. Citi had some pretty good numbers around that as well. So I think right now for the banks, it's a little bit of a mixed bag. You might want to get ahead of yourself and say, wow, are we in for a big earnings season? We're not getting that 2% drop overall in earnings that a lot of analysts are expecting. Maybe we're going to get growth. I think it's a little too early to maybe jump to the conclusion that we're going to outperform on earnings once again. I want to hear from a few more of these companies, especially in communication services, technology, because those are the real big behemoths that drive that earnings growth in any given quarter.
All right, Shawn, as always, thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.